Hello folks, L.A. Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey, welcome everybody to your weekly assessment of where things are and where they're going. And if we look at the markets as of last week, well, it was nothing but up, and especially in tech. Tech is driving everything, folks, and you know, if you look at the sectors, you can see it, right? It's all semis. It's also the mega caps, technology, right? If you go down here to the mega caps, you can see the kind of gains the mega caps drove over the past week. So, you know, in a nutshell, AI infrastructure, everything down that pipeline, right, is driving these markets higher and higher. Now this week I gave you a special edition with a deep dive into the whole ideal of timing in the model, the neoclassical model, and I used the SOXX as an example. And when you look at it, right, I mean, what's happening here is you've got a stretch that's taking place on this time frame. You know, in price-wise, we know the SOXX has been crazy to the upside, right? But you still got probably a couple of weeks left, and I go through the whole thing. I give you a lot of tutorial about how this actually works, so hopefully that will help you to see the markets a little bit more clearly. If we go to what moved, right, the mags have broken out. I mean, this is kind of key. I mean, this was the one sector that so far had not moved this market, right? It had been semiconductors primarily, and you had, you know, participation elsewhere. But this week, the mags, the Magnificent Seven, they did break out. They broke this swing point, they broke that one, and if they hold up here, they're going to break on the monthly as well, and that means that they can just keep going. But you can tell it's narrow because you don't even have, you know, a full breakout yet in the equal weighted S&P 500, and that tells you that breadth is narrow, right? Trend wise, looks great. But if you go to this is trend breadth. This is cumulative trend breadth readings. And if you analyze what's going on right now, right, where you're seeing this price, not price, but this red line moving higher, that's telling you there's more bearish trends and fewer bullish trends, right? That's the scenario. Yet price continues higher. Well, we've seen that before. I mean, it's not unparalleled. It does happen, and we saw it back here, right? Where you know, you hit a low here, moves up, you know, and just continues to move, and then it spikes. Where does it spike? It spikes when there's a push down in price. You know, up until then, you get minor little pushes down in price, but nothing significant, and then you get a 5% drop, right? On the S&P, 9% on the NDX. And then when that happens, what takes place? Well, the bearish spike back down to the low, the bullish spike back up to the highs as price recovers. And so, you know, I would think that this is going to play out the same way. The question is like, you know, does it happen right here? Is it another week out, 2 weeks out? You know, where does it happen? And you don't know that, right? But you can tell it's coming. And so, you know, if anything, it's a flashing warning sign that simply says, hey, be aware that you're going to have to take a drawdown before too much longer. And if you're in the, you know, high flyers that are moving 15-20%, well, they're probably going to move down 30%. And so you just have to be aware of that and position yourself such that you can you know, weather that small storm, if you will. And that's where I'll probably leave it. Weekly projections here, you know, I expect a little bit more. There's another ABCD that points to 7448. I would think we're going to tag that, maybe overrun it a little bit, and potentially that's where we get a little bit of a setback. All right? See you later. Take care.